Welcome back to Ingenious Accounts World. Some more special terms. We are going to discuss about 6 more terms today. The first one is purchases. Purchases, not purchase. Purchases are the total amount of goods procured by a business. That is, the total amount of goods purchased by a business. That means the purchase of goods only can be termed as purchases, and the purchase of other items like the purchase of stationery for office use or the purchase of any other assets for office use, etc. are not purchases. Only the purchase of goods. Goods means the product in which a business unit deals or the product bought for resale. Such products are known as goods, and the purchase of these goods can only be termed as purchases. And in case of a manufacturing concern, they are not buying and selling. They are producing and selling. Then the items purchased for their production, that is, the raw materials purchased for their production are taken as purchases. But for a trading concern, their purchases are in the form of finished products itself. And the purchases are of two types. Cash purchases and credit purchases. Cash purchases. If the payment is made at the time of purchase itself, such type of purchases are cash purchases. That means purchases and the cash payment both takes place at the same time. Whereas in case of credit purchase, we are not making the payment immediately. Payment is getting delayed. Such type of purchases are known as credit purchases. Okay. Then the next one is sales. Sales are total revenues from the goods or services sold or provided to customers. That means sale of goods. Only the sale of goods can be termed as sales. And the sale of other items like sale of old newspapers and magazines, sale of any assets which were used by the business, etc. are not sales. Only the sale of goods can be termed as sales. And in case of a service-oriented business, the revenues from their services are known as sales. And sales are also of two types, cash sales and credit sales. First one, cash sales. In case of cash sales, we are receiving the amount immediately. At the time of sales itself, we are receiving the amount. And in case of credit sales, the amount is getting delayed. We are not getting the amount immediately. It will take some time. Such types of sales are credit sales. Okay. Now the third one is discount. Discount is the deduction in the price of goods sold. That means if we are getting a deduction from the price, such deduction is known as discount. And the discounts are of two types, trade discount and cash discount. First one, trade discount. Trade discounts are offered at the time of sales. And these discounts are offered as a percentage of list price or market price. That means 10% of market price or 15% of the market price as discounts. And these are given for increasing the sales. We are all familiar with such types of discount. Discount sales. There, the discounts are given at the time of sales. And it is offered as a percentage of MRP, say 5% and 10% like that. And we know that these are given for increasing sales. Such types of discounts are called trade discounts. And the next one is cash discount. Cash discounts are given after sales, after credit sales. After credit sales, the buyer needs to pay the amount within a stipulated time. If he is making a prompt payment or if he is making the payment early, then that time the seller can give him a discount. Say instead of 5 lakh rupee, he is agreed to accept 4,95,000 rupees. Then the buyer needs to pay only 4,95,000 rupees. Such discounts are known as cash discounts. The discounts given at the time of payment. And These types of discounts are given as an incentive for prompt payment. Okay. Now the fourth one is stock. Stock means something on hand. Closing stock means stock of goods on hand at the end of an accounting period. That is, stock of unsold goods at the end of an accounting period are called closing stock. In a manufacturing company, closing stock includes raw materials, semi-finished goods and finished goods. But for a trading concern, the closing stocks are also in the form of finished products. And the closing stock of one period is the opening stock of next period. Okay. Now the next one is revenues. Revenues are the amounts earned by a business by selling products or by rendering service to the customers. It also includes other revenues. That means revenues include sales revenue plus other revenues. We have already discussed about sales revenue. Now other revenues. Other revenues include commission received, interest received, dividend received, royalty received, etc. That is, revenues is equal to sales revenue plus other revenues. Now the last one is expenses. Cost incurred by a business in the process of earning revenues or cost of running a business are known as expenses. Generally, expenses are measured by cost of asset consumed or cost of services. Cost of asset consumed means cost incurred for consuming an asset, that is depreciation, rent for building, etc. And cost of services include wages, labor charges, salary, etc. That is, expenses include cost of asset consumed plus cost of services. Okay, these are the 6 terms. Now, if you found this video helpful, please like, share, comment and subscribe my channel. Thanks for watching. Thank you.